So the trends in Asia Pacific are similar to others globally, is really just this huge weight of capital. We've got some of the world's largest investors looking to increase their allocation to real estate and direct real estate, and also increasing their allocations to Asia Pacific, and really rebalancing their portfolios away from fixed income and equities. So that's driving a huge amount of transaction activity in Asia Pacific. We saw in 2014 record transaction volumes of over $120 billion. We think that this year will finish at around $125 billion, and we think increasing again next year in 2016. So weight of capital, looking for real estate exposure, is really what's is a global trend that's driving the markets here. In terms of liquidity in Asia Pacific, you know, the key drivers are global capital that's looking for exposure into the Asian real estate markets that I talked about. And in fact, much of that capital is Asian itself. I think more than 80% of the transaction volumes in Asia Pacific are done by Asian investors. So it's a huge amount of growing wealth. It's wealth accumulation with pension funds, insurance funds, and sovereign funds out of China and some of the Asian countries. So that in itself is not only impacting Asia Pacific, it's impacting all of the global property markets, and most specifically China.
Well, I think the key trend to impact the real estate market in 2016, I would say there's one key theme, which is a shift. And if you want to explain the shift, that can translate into three key words, I would say. The policy and reform, as well as technology. So if you talk about the policy, I would say on the residential sectors, the government will continue to support and refine their policy, so that to support more, reduce the downgrade of the mortgage, as well as the payment for the second home or upgraders. So that's the policy side. On the technology side, I think with the new technology, the online shopping and e-commerce, that will fundamentally change and shifting the shopping center and retail business. So for the shopping center developers, we will see more and more experienced centers, the F&Bs and kids areas, as well as the logistics part also benefit from the online shopping. So the online shopping will benefit directly to the logistics sectors. Well, in terms of the reform, as I mentioned, the reform is one of the key areas the government will put effort. So which means the government will continue to drive the financial sector's reform. As a result of that, we'll probably see positive impact on the leasing and investment opportunities for the office market. So that's really the three key themes, I would say, for 2016 in China real estate market.
Now, because places like London and New York, those key cities, are considered now to be, I won't say in a bubble, but they're certainly very, very top end. So investors can no longer see a good capital value growth story, and therefore we'll start looking at other places like cities like Manchester, then cities like Boston, Chicago, are all cities that still are considered to be undervalued. And I think we're going to definitely see more projects from those cities. Brisbane, Australia. I mean, Australia is extremely popular with the Chinese. And I think places like Brisbane, Melbourne and Perth are all cities that still have room to grow, and that we haven't seen them being marketed offshore. I think we're all predicting that it will slow down a little bit. We have had an amazing 4-year, 5-year run in terms of values. So other than, I think, new places, as we said, new cities emerging, I think generally the feeling is that 2016 will be a little quieter and a little bit more challenging. And maybe, yeah, not quite as prolific in terms of numbers of exhibitions and product that we have seen coming into Asia over the last 4 years.